Hey guys, everyone, I am Charlie Shrem, and you are watching and listening Untold Stories, where twice a week I get to dive deep with some of crypto's most influential leaders, the coolest people in the room, the brightest crayons in the box. And today we're here with the king of new finance, the king of DeFi, Tim Frost. Tim, like there are very few other people that can really claim to be part of so many new finance projects, especially, and I like that term, especially in DeFi, especially in crypto. You're part of the founding team of Wirex, which everyone knows and uses, EQIBank, which everyone knows and uses, and is involved in the underbelly of so many of the companies and projects in the space, helping with banking and financial infrastructure. And now Yield Finance, Yield.app. I mean, most people are comfortable with like doing one thing and founding one company, but all of a sudden it's not like it's one and then it goes away and you do another one. These are three very important companies now in the crypto space. Are you like, oh my God, I don't even know what question I want to ask because I have so many good questions here. But really, how is Yield different? Why it seems to me like Wirex and Equibank were more on the older finance side, but you were like trying to get into new finance. And Wirex was one of the first consumer products in the space, actually. I actually used Wirex for a long time, the virtual debit card product. But then you really jumped into DeFi and new finance, hardcore, but still maintaining the ability to be like have security, auditing, regulated, do all these things to be like appease
Yeah.
all the sides and everyone. Bring it all together for us.
Yeah, no, thank you. Thank you for quite an introduction. So my background, what I've been doing in the last 7 years is that early stage fintech development, and I said I've been part of a lot of great teams and great companies to help really kind of early stage growth. And I think really the kind of light bulb effect kind of really hit me when COVID hit and everyone was just spending all day on the computer, and then I finally went down the kind of DeFi rabbit hole, and once I really got involved, one of my co-founders at Yield was actually living down the street, and we just started spending just I guess all day every day, and I just became absolutely obsessed with DeFi, and I kind of dismissed it kind of originally, and then I just started to kind of I guess really spurring a lot of ideas of what could be done with this kind of technology and all this financial ecosystem was being built. So one of the missing elements, and part of my early days at Wirex, and I'm very proud to be part of that original team. But there's a way of using your crypto assets. It is a digital banking infrastructure, but there's never really a reason to kind of keep your money there. And the real purpose of like what you want from financial institutions is ultimately to be able to grow your nest egg, to grow your assets that you have there. And so what we started to put together was like, well, there's fantastic yields happening in DeFi, and some of it's absolutely wild, and but some of it is absolutely very very sound and built on very sound principles, and these things are going to be here for the years to come. And can we tap into that and offer these high interest yielding accounts, and offer this to kind of more of a retail kind of clientele, that more like what we had at Wirex. So to kind of fast forward, that's kind of what we've built, and now have launched that Yield app.
The same way you described DeFi, and in the past year, the amount of realization that I've had how DeFi is really the first killer app for cryptocurrency that I saw, because we've proven that Bitcoin model over the last 10 years. And the 2017 ICO hype cycle was arguably a testing of this technology. So while the companies and whatever, a lot of, out of every 100 ICO companies, we had one really good one. If you look at that as like just testing the technology, stress testing the technology, and go back and say, okay, we know we can build shit on this now. What can we build? And you're right. Like, we don't just want Bitcoin and crypto to be like just spending, it's leaving your money there and growing that nest egg. But how can you explain DeFi to people who don't really understand, who understand already crypto, but don't really understand why this is so important. And really, like, how can we explain DeFi to people? How do we even just define it for people who don't understand cryptocurrency as a whole? And now they're like, oh, DeFi, DeFi, all these coins. They're like, so now we have to explain crypto to them, Bitcoin and DeFi to them. It's very complicated.
Yeah, absolutely. It is complicated. I'm still learning, and I think that was one of the inspirations of actually starting Yield. And so I think the best way I think we've done is to strip this down into what is the basic fundamentals of finance. So what Bitcoin really brought us was peer to peer money. You can send money to me, I can send money to you. It's borderless, it's frictionless, and that alone already made everyone's kind of, I guess, eyes pop of
Yeah.
everything that could be. And with the evolution of smart contracts and now what has kind of evolved, especially over the last 4 or 5 years, we have basic financial transactions happening on chain. It's borrowing, it's lending, and people are now using these such as derivatives. So it's taking like the traditional finance, which has been proven out over the course of time, and now putting these things on chain, removing intermediaries, and now they're happening 24/7, and they're ruled by smart contracts.
And it all comes down to liquidity, right? Like 2020 taught us that that word matters more than market cap or price or anything. It all comes down to liquidity. And efficient markets just want liquidity. And now I really understand why you have various, you have the M1 money supply, you have the M2, because some of it is readily available and other parts of it are just accessible through the credit markets because businesses and companies need liquidity. Is a correct and I'm gonna is a correct way to define liquidity like to someone where I say, hey, if I give you $1 million and all I say is I'm a bank now, so I'm going to offer you this liquidity at 5% a year. So at the end of the year, you have to give me back, let's just say it was $100,000. You have to give me back 100,000, $105,000. So that's liquidity. But you can use that money for whatever you want. You can grow your business. If you have a painting company, you own a paint supply store, you can use that money to purchase stock. So while it's not your profit, you have the ability to use that to further your business. How does liquidity apply into something like DeFi? Why is liquidity so important in crypto?
Well, I think you've just kind of really hit it right on the head. So I think really when I would look at Uniswap, and what really got put kind of Uniswap really on the map was just people be able to bring and add liquidity to the pool. And so you need a maker and a taker. And if there's liquidity providers, and if they are being rewarded and taking a fee right directly from the liquidity that they're providing. And now with these kind of LP tokens that have kind of emerged, and another kind of incentive mechanism around this essentially is making a very fluid market. And obviously with the emergence of all these aggregators now working across multiple dexes, this thing has really started to evolve very,
Yeah.
very rapidly. So
And as this market is starting to become more efficient, there's a lot of money to be made. Markets take a long time to become efficient, and if they're growing, their growth will always outweigh the markets. Like efficiency follows growth. So now I've found that if you study hard enough and if you look hard enough, you can find very good yields and very good margins. For example, just providing liquidity on a token. The risk is that the token will drop in value, obviously, just like anything else. But if you're already holding that token and you're holding ETH or another trading pair, you can go in and just be both maker taker and earn a yield. And sometimes these yields are very great. And if you ask someone, oh, if I can offer you 20% yield a year, where this is the risk, but it's all done on smart contracts, I potentially would be comfortable with that risk, especially if I'm holding this token already. Are these the type of like strategies that you guys do in yield finance?
yeah, that with yield, that is to break it down very simply, that is the very principles of where we're kind of operating. Our team particularly, work very closely with on Curve, is the primary kind of protocol that we're
Yeah, I
really
like
have
Curve.
stripped down into kind of all the nuts and bolts, and have really kind of built out and integrated directly kind of into. And that is essentially that we are providing the liquidity, and we are searching out all the opportunities. As you said, these markets are inefficient, and there's every day there's new opportunities that are taken advantage of. And if you have a team that really kind of knows and understands it and is able to take advantage of it and fill the need, there's absolutely direct financial rewards that are tapping into.
Yeah, you're tapping into these inefficient markets, making them more efficient, providing growing the ecosystem, but also providing the ability to make a profit. So now, how does it work from the user side? Someone is holding, $100,000 of USDC, and they come to Yield Finance, Yield.app. What does it look like? What does sign up look like? What are some strategies that people can look at?
Well, we're trying to obfuscate all this complications. We trying to make it as very frictionless as possible to open an account. We are a fintech, so you get on and you provide basic KYC. You deposit your stable coins, soon your Ether, your Bitcoins, and we'll have those fiat gateways. So you deposit your funds, and you have an option to invest. You have very predictable returns. You get kind of daily returns, and for the end user, we want it to be as simple as that. You are earning daily yields, and you have the opportunity to kind of withdraw your funds at any time.
Are these funds kept where I control the keys here, where I'm controlling, like, is my password encrypting the keys of these coins or whatever?
So we use BitGo for our
Oh,
client
custodian,
wallets.
awesome.
So yeah, or real target market. I understand what you're getting at is the people that, well, we need to be able to reset passwords for, and we have insured wallets on our side that we handle.
Yeah, it's great how companies like BitGo came up and said, "Hey, all DeFi projects and really any type of like crypto company itself that wants to like maintain funds, we can offset the regulatory risk, we can offset the security risk, and we'll do it all and then we'll insure ourselves." When Ben pitched me that idea years ago in the Facebook campus, I remember like sitting with him in like at the Facebook lunch. It was the only time I was ever at the Facebook lunchroom I ate for free, and Ben was working because he had built Facebook Messenger. The founder of BitGo built Facebook Messenger, sold it to Facebook. So he's like, yeah, we're gonna do this Bitcoin. And I said, dude, what are you talking about? Like, no one could even get any Bitcoin right now. Like, you can't even buy Bitcoin. You're gonna talk about being a custodial solution and doing all these things. You're like 10 years down the road. Well, I mean, like, who's laughing now?
Yeah, no, definitely. There's the two sides of the equation. Obviously, they've been developing parallel, right? Those that say it's my not your keys, not your coin, and those people that like like last week I had a kind of incident with kind of a family member that, well, they looked and they had a little bit of Bitcoin, and they realized it was now extremely
Yeah.
extremely valuable, and they thought that they had their coins in a particular wallet at a particular exchange, and they didn't.
Mm.
They ended up having it on a wallet sitting on an old phone that could have been tossed out at any moment. And so I said it's why they exist, right? And ultimately, I think that well, if we look at, I think that still the majority of coins are still sitting on centralized exchange wallets today.
I wanted to mention that this show is produced by Blockworks.co, a media production company that I trust and love. Without them, this show that has been running for like a year and a half wouldn't even be around. I love those guys. They're a media, events, and production company. They produce tons of other podcasts that are run by my friends. So if you like listening to podcasts and if you like reading the news, if you like checking anything out or participating to events, Check out blockworks.co. Thank you guys so much. I really appreciate it. Tim, how is yield different? So we understand how yield is different from other like platforms that you can go in, like Coinbase, Voyager. Well, I don't even know about Coinbase, but like I said, Voyager, Nexo, some of these centralized interest-bearing platforms. We explain the difference between those and what this is here. But where does this fall into like DeFi? Are we starting to like have more of a DeFi is on a spectrum that some will just be more centralized, some will be less, and then they all fall somewhere on that spectrum?
Yeah, a little bit. So, there's some excellent companies you've mentioned, Nexo, Celsius. These companies actually a lot of the inspiration of that kind of is behind what we're building. They're doing a lot of more traditional kind of lending with your assets, and where we've really gone to is we're chasing yields, and right now we are providing much higher yielding accounts than some of these competitors, and I think that's kind of where our real value is. I mean, we feel like we really understand DeFi, and we got a great portfolio team, a great development team, and we are very comfortable with deploying capital directly into high interest, but we think very secure and safe
Yeah.
yielding protocols.
You're doing the legwork. You're going out there and hey, like panning for gold. I hate to say it. Whereas like even someone like me, I've been in the space 10 years. I'm still not fully comfortable putting money into like smart contractual based DeFi platforms that I fully don't know. Like I'm so crazy about it. If I see the audit, like okay, Hartej is one of your advisors and auditors. If I
Yeah,
see him that he audited a smart contract of another platform, like I will go and start hammering him about it because I'm so nervous because I've lost my money so many times and I've lost my family's money so many times. And I don't, my wife told me to stop speculating with our rent. So I have to be careful. So in this situation, you guys are going out and doing the legwork. Okay. So let me ask you a question. Things break, things fail. Every day, another smart contractual platform, whether there's something breaks, something gets hacked, exit scam, whatever. It just happens. We're in an industry. Who takes that risk in this situation? Does Yield
yeah.
take
So
that risk, or does me as I take that risk?
yeah, so it's good. It's a good question, and I think everything you kind of just touched on. I mean, I think right now, if we really strip down our portfolio, which I'm not going to go into too many details on all of our positions, but I mean, these are time tested. These are we're not chasing the newest, hottest flavor of the week, right?
Okay, good.
So while we want to be relevant and we want to understand everything that's really happening. Let's say, as we have our corporate funds deployed anywhere client funds are. So we feel very comfortable, and we make sure like we have our own kind of our own skin in the game. And so these things have been well, nothing in crypto is was 100% safe, but I'm kind of glad to maybe offline go through a couple very vanilla strategies that we feel are completely secure and have
Sure.
proven over the test of time. So, but the insurance aspect, this is I think one of the key points to this, and so obviously with the BitGo, we have insured wallets, but that doesn't help you when actual funds are deployed. So, initially we are underwriting or portfolio. We are building out our own kind of insurance pool, and a percentage of the
Oh,
the
cool.
AUM, the revenue is being aggregated initially into a pool, and where we know where we're going to get to, and we're looking at like quarter two to really have something of substance is to work with one of the top kind of decentralized insurance pools and projects and companies out there, and make sure that we are able to safely and securely and manage risk properly. So it's a long work in progress, and overall, I mean, this is it's a necessary step, and we know and recognize this. So it's at the top of
Yeah,
our,
of course.
our roadmap.
And that grows, and then what'll end up happening is that risk will. One of the biggest I would love. I don't even want to talk about it because it'll. Someone's gonna do it. You're gonna do it. Someone's gonna do it. But the ability to trade risk within the crypto ecosystem, we don't see yet. So, for example, you'll soon see. Okay, we're about to go. I think we're gonna go through an epic liquidity squeeze with Bitcoin, but with most hard cap cryptos. You're gonna see an epic liquidity squeeze. Really, really starting with Bitcoin. And when it comes to that, uh, a lot of these companies, most of them, in fact, PayPal, Robinhood, Cash App, they're merely giving you an IOU on the crypto. It's not the actual asset itself. When there's a liquidity squeeze, and right now, Grayscale and all these companies are buying more Bitcoin than there are being mined every single day because there's so much demand for it. Why don't we see the ability to trade like Robinhood IOU BTC versus PayPal IOU BTC, and then that being a trading pair in and of itself, and then you have more liquidity, and then me, I'll provide that liquidity.
I think we are. I think we are going to start seeing more and more
It'll be
kind of
so cool.
insurance products, and you are correct. I mean, there is absolutely some squeezes coming, and this is. I mean, there's markets that are emerging quite fluidly on the topic. So both in the Bitcoin world and obviously all the tokens and the more conventional DeFi as well. So I think it slowly is moving, and great ideas. I mean, that's obviously we have ambitions to merge into similar things, but it's just about a time and a roadmap to be able to get there.
We always thought that, uh, like, it would just come down to why do you need a blockchain? It's just an Excel spreadsheet, essentially. But then if you look at that and you say, well, if you have millions of Excel spreadsheets, if you have all these blockchains, because if you looked at why you need a blockchain from the premise of there should only be one blockchain, then yeah, you're going to come up with that scenario. But if you look at it like there's going to be thousands of blockchains, they're all going to be a little bit different. They're all going to have different economic strategies. They're all going to have different socioeconomic strategies and built in and people and equalities and blah, blah, blah. And all those spreadsheets are going to need to like interact with each other in the most efficient way. Then yeah, you need a blockchain to do that. And that's really kind of like where we're going here. Uh, I think you guys have um engines. You have like portfolio engines. How does that work? What are the type of portfolios that I can see? Do I choose? Do they swap between each other?
Well, the sheer amount of data, as you're kind of referring to, I mean, it is just so much that we can't even kind of visualize. What is happening. I mean, already internally, I mean, we're trying to understand of how do we possibly gather and aggregate all this data kind of properly and to kind of be able to display this. So on our side, this portfolio management system it's an internal tool, right? And it's our kind of internal tool to what we like to say is it's our kind of eyeglass into DeFi.
Yeah.
It's we're looking at all the protocols we have um, different tools that have been built to be able to monitor the mempools. There's essentially even social kind of data pulled off of this, and ultimately
Really?
we have well we're this is where it's a crypto moves 24/7, and there's any sort of signs of any kind of mischievous deeds, they show up. Obviously, they show up on chain very early, and they show up on
Yeah, they
social,
do.
and and things do spreads very quickly. And so it's a lot about being understanding the data and being able to react quickly. And if you have different triggers kind of set up, I mean, you can actually get to a point where you understand what's happening in the market potentially faster than the other people. So
It's such an amazing thing to even say that you're not chasing yields in traditional markets. You're chasing yields in crypto markets. So that implies that our industry is so far along that we have inefficient markets that need to be like kind of all brought together in their ability to make, kind of like the early days of Bitcoin when you can make money simply. Like that's what it reminds me of. Like you can make a lot of money simply by doing the legwork of going to an exchange, maintaining two balances, buying Bitcoin on one, selling Bitcoin on the other. The simple act of opening up two exchange accounts and getting verified was so difficult in 2012, 2013 that you can make significant yield just by that arbitrage. And people built massive businesses. I built arbitrage bots that I never even got to use because I was arrested. But we were going to like arbitrage on Mt. Gox. Well, it's good we didn't because Mt. Gox ended up shutting down and we would have lost a bunch of money. But we were going to do all this arbitrage. It was crazy. But it's changed.
So many people are just, they're slow. They're going to be slow to react. And we do, I mean, every day now we're talking with more traditional money, traditional capital, traditional
Sure.
funds that are wanting to understand how they can actually enter these markets, understand the markets better, and they'll be a little bit slow to kind of react. So you are correct. In the interim, there is absolute opportunity on every front because the first movers do have the tremendous advantage.
What are we still missing? What are the crypto markets still missing? Because these are the things that I'm going to look for as the new flavors of the week, as you say. Because, a year ago, if we were talking, I would have said what's missing when you were at Wirex or doing EQIBank, and I would have said what's missing. You would have told me, well, this is missing. What you do now. So now, what's missing? What else does our industry need? What's your number 4 company?
I mean, I think what's missing, particularly in DeFi, well, what's missing in crypto overall is still, I think, is I feel like it's always been kind of fortunate. Is well as it is self-regulating. I still think it's still not nearly to the place that it needs to be. And
It's a good
I think
point.
all signs point to we are in the middle of another massive bull run, and I guess in a year ago, so much of what's happening right now would not be getting by because there'd be more people pointing towards this, and I guess more almost internet kind of detectives, right? That are going in and raising flags and bringing people's attention. But it's so naturally, and right now there's a lot of people entering crypto, and a lot of people want to find high yielding opportunities. And well, I would like people to find us and Celsiuses and the Nexos and the Voyagers, but they're, oftentimes they're going to be stumbling upon something that seems shiny, but there's really not much anything there. And it might have higher promises, but it's quite terrifying of the end results oftentimes.
That's very, very, very much the case. Hey, I just tried signing up for early access and it says that only 50 randomly selected users will be invited every 24 hours. How do I get above that line? And how do my
Let me
listeners get above that line?
Yeah, absolutely. The biggest thing is join our Telegram. Just
Okay.
make some noise. Tell us you want early access, and we'll get you on the list.
I like that. Prove yourself,
Yeah,
right? That's awesome.
yeah. It's we love that, right? We love a passionate community, and so oftentimes our moderators are happy to add you. So we've just started sending out batch invites. We just sent out about 200 actually just before this meeting today. I just sent about 200 invites, and we're
I'm a big
working
yield
through like
chaser. Let me in.
absolutely. Well, we'll make sure you're the next batch. But actually, I do have to warn you. We actually don't accept U.S. citizens today. So
It used to be that these rules and laws were written in the US. These more stringent, higher rules were written because it was like a pay to play scenario. Not like pay, but follow the rules, do what you got to do, and you have access into the US markets. And you can have access to the US banking system, access to US customers, access to US money. But now, that's not the case anymore. Most companies in crypto say the exact thing you say, where it's like, we simply just don't need US. We don't want it because it's too much of a burden. And there's enough money, there are enough people now that the world has liquidity there are enough people now that it's just simply not the case anymore. Will that change?
Well, I don't know if that's going to change in the short term. I mean, it is the greatest market in the world, and then every financial company in the world would ultimately want to serve the U.S. market for, I mean, so many reasons. But people are. It's just the barrier to entry is a little bit more. I mean, and internally at Yield, I mean, that is absolutely at the kind of our or list of
Yeah.
be able to be able to provide services to U.S. clients. Just there's just a process that we will have to ultimately work through.
Tim, what's the most excited feature that you want to launch for Yield in 2021?
Okay, so this is where we feel it's going to be very powerful and what we're quite excited for. So we have our stablecoin fund now, and we will be launching a Bitcoin and Ether fund that will be kind of more DeFi focused. And so being able to trade through your positions from your stablecoin fund to your Bitcoin fund to your Ether fund, while essentially staying invested and continue to earn yields. And so this is kind of our, I guess, on our big master kind of a to do list and to kind of build out right now. But we love the idea of people want to be able to hedge their assets, and now if they if there's a correction, if they want to go back long Bitcoin, they can ultimately stay invested and
Sure.
continue earning APY on it.
Do you see yourselves offering the ability to trade for people to trade within their position? So I guess, is there a connection between the token and then position in the investment itself?
Yeah. So well, there's the relationship. I mean, the token is a rewards token, and it essentially amplifies your APY onto the platform. So, yeah, that was actually exactly what we wanted to do. Is if you're invested earning a 20% APY on stablecoin fund, and Bitcoin has a 25% correction, and you decide that, hey, it's a good time to re-enter Bitcoin, we want you to be able to move from your stablecoin fund to your
Yes.
invested Bitcoin position to, obviously it's going to be a lesser return, but you stay essentially invested long into Bitcoin while still earning APYs powered through DeFi.
Do you, I kind of want to leave off with this question that I hadn't actually pre-written, but it seems like there's like a flavor of, not a flavor, but like a thread that I'm seeing with you and a lot of other people that I've been talking about. And I'll preface it with the fact that, with even going back to when Ethereum was first launched and the invention of the term altcoin and maximalism, a lot of people were afraid, and this is where maximalism came from, that with the advent of Ethereum ICOs, DeFi, more tokens, blockchains, Bitcoin would lose its culture identity and like love. But it seems like the opposite happened. So you look at you, for example, and from what I'm gathering, it's like you are balls deep in DeFi and new finance, uh just going from Wirex to EQIBank to now. But there's still like a love and a passion for Bitcoin and like a cultural and an understanding of sound money that you've talked about as a thread. And it's heartwarming because I see that with a lot of other people too. Do you agree?
Yeah, no, I mean, I think it's still here. I think the majority of people still, I mean, still feel like this is, I mean, it is still king, right? And we all believe in it's a still has a very bright future, and
Yeah.
we're now, now it's hard to believe how many years it's actually been released, because it feels like it's still so so premature to ultimately where it's going. But I mean, for guys like myself, I mean, like it's Bitcoin is amazing, but like what do you do with it? You hold it, or you buy it, or you sell it. I mean, it's like a piece of gold, right? And so there's already, I mean, thousands of companies that have been built that are, that allow you to do these, right? And they can allow you to hold it and hold it in certain different ways. But the I guess the next evolutions that are coming, right, are like these things through kind of DeFi, which is now it's more, I guess, more kind of rapid paced and more, I guess, dynamic, and ultimately it's going to allow us to do many more things that Bitcoin just simply doesn't allow.
Is it an evolution or is it a revolution?
Um, well, I think in the digital currency space, it is an evolution, and it just what a Ethereum has built, right? It just built off the framework of what Bitcoin had laid. But in finance, I mean, this is a absolutely it's a revolution, and I as much as I have a love hate effect with with the kind of crypto industry overall. I mean, this is a powerful evolution, and it's hard to even deny it now. With so many major companies have they're working on things with the advent of stable coins and everything that the possibilities now this starts to open up of where finance is going, and the way that money is going to be moved, and like all the advantages over Bitcoin for actually moving capital.
It's a religion, my friend. And all of us listeners and users and creators and doers right now, whether you believe in religion or not, if you look at the stories of religion, those early followers of the prophets, etc., that's who we are. All of us, the listeners, the users, the doers of crypto, we are those people who just in the beginning blindly followed something that we believed was right. And here we are today. So Tim, thank you. Thank you for not just coming on the show, but continuing to trailblaze and for not giving up and growing our industry and talking to me all the time on Telegram.
Oh, thank you, Charles. It's an honor to be on the show as one of the best shows in the
Thank
whole
you.
industry. So I appreciate it.
I really appreciate that. I really do. Thank you.